I am sure that you are hearing all over the place that yesterday's price is not today's price. But what a lot of people don't know is that the basis behind this is inflation. The consumer price index is 6.2%. That means inflation has increased by 6.2% over the last 12 months. Now, some of you might not know exactly what that means, and we're going to talk a little bit about that in this video and what are some of the things that we can do to prepare for what's going on. So, without any further ado, let's get into it. For those of you who don't know, the Consumer Price Index, also known as the CPI, is the most commonly used measure of inflation. So today we're not going to go into a whole bunch of formulas. I am not an economics expert. This is not an economics class, but let's just take a look at what's been going on in the economy and what we've been seeing all over the news. We've seen that the government is printing out trillions of dollars and giving it out in things such as stimulus packages to people because of all what's been going on in the economy over the last couple of years. And what a lot of people don't realize is that as the government is printing out money that is based on nothing, and if you don't know what that means, that's a whole nother video, but the government continues to print out money, literally just printing it out. It's not backed by anything. It's not backed by silver. It's not backed by gold. We are literally printing out money because we can. And because we're doing that, there is a surplus of money that is going into the economy. And as a result, and this is a very high level reason, but this is one of the reasons why inflation is happening. We are printing money at unprecedented heights, and inflation is a result of that. So the next question is, okay, well, what is inflation? And this is a very simple way to put it, but inflation is essentially the loss of your purchasing power over time. It's also known as the rise of goods and services in terms of their prices. So for example, I'm sure many of you are going out to grocery stores. Maybe you're preparing for Thanksgiving. Maybe you're preparing for the New Year or for Christmas that's coming up, buying gifts for those that celebrate. At the end of the day, if you take a look at your grocery bill now versus maybe 12 months ago, you might be seeing that you're seeing a bit of a difference or a lot of a difference. And that is because of inflation. Inflation literally impacts everyone. There's a misconception that wealthy people aren't impacted by inflation. But the fact is that inflation impacts literally everyone. If McDonald's is increasing their prices for a Big Mac by $1, let's say it was $4, and these aren't the real prices, I'm just giving examples. Let's just say the McDonald's Big Mac was $4 last year, and now it's $4.50. Okay, well, Jeff Bezos and all of his friends can't go to McDonald's and say, hey, I want to get 2020's price or 2019's price. Everyone is paying the invisible tax. But what the difference is that people that understand money, they are making sure that they're putting their money and they're investing their money in a way that is going to be able to be a hedge against inflation. And what a hedge against inflation means is that you are essentially understanding that inflation is happening. You are expecting for the value of your currency to decrease. So therefore, you're looking for ways to increase the value of your dollar in the future in anticipation of inflation going up over time. We know that many people are putting their money in bank accounts and keeping their savings in bank accounts. Look, I am not a financial advisor, so let me just make this clear. I'm not a tax expert. I'm not a financial advisor. This is only for an education and entertainment purposes. But at the end of the day, let me just tell you the facts. Most bank accounts, average interest rate is less than 1%. So let's just take, for example, the last 12 months. If you kept your money in your savings account and that savings account earned you less than 1% of interest, yet inflation increased by 6.2%, your money literally lost value by just sitting there. And that is the key in regards to why we really need to do something about it. So the question is, what do we do about it? Inflation is going up. What is there to do? And my answer is that the best investment that you can make is in yourself. Warren Buffett said it best. He said that the best hedge against inflation is to improve your own earning power, your own talents. And I absolutely love this. Investing in yourself is absolutely invaluable. And a lot of people sometimes focus on, okay, what can I put my money in? What can I do? What tools are out there that I can put my money in? But really, what's in your hands? Are you a W-2 employee that's an accountant or a financial analyst? Are you a doctor? Are you a lawyer? Are you a entrepreneur? Really, I like to say, look in your hands. What talents have you been blessed in? And how can you up those talents? How can you monetize those talents? If you invest in your knowledge and invest in what you're good at, then you can monetize and create additional streams of income through what you're doing, or to leverage that skill set, maybe to negotiate a salary increase, to apply for a promotion. Those are practical ways for you to be able to very independently, based on who you are and your personal skill sets, to be a hedge against inflation by investing in yourself. And some people are like, okay, well, that's very obvious news. But at the end of the day, a lot of people aren't doing this. So by you investing in yourself, you're giving yourself an opportunity to monetize yourself in a way that you previously couldn't before. Now, a lot of people are aware that I am a real estate investor. I've been doing it and I love it. If you have not watched some of my past videos, make sure you check out this channel. I talk about how I made 6 figures with my first 2 deals investing in mobile homes. Now, at the end of the day, I am not married to real estate investing. As I have time, I go out and I research what are different ways to build wealth, because I believe in having multiple streams of income. I say this to challenge you. If today you are focusing on only one area, I challenge you, maybe you should start looking to one other investment opportunity in 2021, whether it's investing in yourself or investing in the many different tools that are out there to invest. Start looking into it. But diversification is also a big player in terms of having a strong hedge against inflation. Now, as you know, I do real estate investing. And so the next question is, okay, well, is real estate investing a good hedge against inflation? And the answer is yes, if you know what you're doing. Real estate investing is a tool, and it is up to you to educate yourself and empower yourself so that if you choose to, you can make good decisions that will bring you wealth in the future. I will share a couple of reasons why real estate investing can be a tool that is a hedge against inflation. One is appreciation. Generally, the prices of properties generally increases over time. This isn't for every property, but in general, real estate properties increase over time, and we call it appreciation. And so because of that, if you are investing in a home, and let's say you bought that home at $100,000, and at the end of the next year or 2 years, it's 120, you have built $20,000 of equity. So you take that 120,000, you subtract what you bought it for, that's $20,000 of increased equity. And let's say you have that property as a rental. So we're going to go into the next benefit, which is cash flow. So let's say you have an Airbnb. If inflation is going up, and let's say that before your daily rate was $300, if inflation is going up, maybe you can start charging $350. You can mark up your short-term rent based on what you're seeing in society, so that you are improving your stream of income, you are improving your cash flow while maintaining an asset, which is your home, that is appreciating over time. So cash flow is the second reason why real estate can be a good hedge against inflation. Another reason is because of the tax benefits. Ultimately, the more money you can keep in your pocket, the more wealth that you can build, and the more that you can use to reinvest in other areas or other cash flow producing assets. Real estate investing has a very proven track record of building people's wealth. There's a quote out there that 90% of millionaires built their wealth through real estate. Now, whether or not that has changed over time, I'm not here to debate that, but it is proven that many people have built massive amounts of wealth through real estate investing. It is very proven. And also, you are investing in a tangible asset. You can go out and look at the house. You can go out and look at the land. You can go out and look at the apartment. You can go out and look at that real estate. It is real and it is tangible. And you know, you don't have to always invest in tangible assets, but if you are interested in investing in something that is tangible and that you can see and hold, and something that has that proven track record over many years, then real estate investing could be awesome for you. Thank you for tuning in to Real Talk with Olamide. Make sure you hit that subscribe button. Make sure you hit that like button. Stay blessed. Have a great day, and I'll see you soon.